Hi, Aviral. So, CaratLane, it's quite the story. I mean, it was not too long ago that they went through a distress trail and have completely turned it around. Amazing. Can you tell us a bit about why we chose to write about them this week?
Yeah, I think we've been wanting to write the CaratLane's story for a while. I think the last fortnight they posted record profits as well as record revenue. Um, I think it's a story that needs to be told. It's a startup that essentially got sold in 2016 for as much as it had raised, not the whole company, but the investors exited. From what seems like a distress sale to a business that's worth 20,000 crores, I think it's a big turnaround story.
Yeah, and I believe the company was founded in 2008 by Mithun and Srini, and their goal was to make beautiful jewelry both accessible and affordable. Can you tell us a bit about their origin stories?
Yeah, so I think they would have seen this e-commerce wave and the iPhone wave in the US. Mithun studied there for a while, and when he came back to India, he saw that e-commerce was picking up. One of the big gaps he found was jewelry. He actually came from a jewelry family business, and it seemed like a very natural extension for him to take this online. So that's exactly what he did. That's how they started Carrot Lane in 2008. In 2010, they built out the e-commerce platform. They found that um, gold was more regulated than diamonds, and based on some feedback as well as some customer demand, they decided to double down exclusively on diamonds, and that's how Carrot Lane picked up in its first few years. Um, they were able to raise significant amount of money, good seed, good Series A, eventually a Series B, and by 2013 they were doing around 150 crores of revenue.
And you know what problem were they solving? They had this unique insight that women had to pick between expensive jewelry for special occasions and everyday jewelry, which was inferior quality. I think that was kind of the main insight that they have. Can you talk a bit about how they went about solving that
Yep.
problem?
I think their focus on diamonds as well as this category, um, they really found out that women in India, who were the major buyers of jewelry, they would buy jewelry and store it. They wouldn't end up being able to wear it. And that would end up becoming a challenge because the jewelry that they had would not be with the times. And the insight that they got was they needed to get jewelry which was fast moving, which was everyday wear, and which had flavors like I already talked about.
And so, around 2015, they had this sort of growth phase. They expanded to more offline stores. They had about 12 plans to get to about 20 by 2016. But at the same time, they were really struggling to fundraise. And that's when the kind of acquisition happened. The growth wasn't there. The investors weren't too happy. Can you tell us a bit about that whole phase for them and how the company evolved?
So I think Carrot Lane ended up raising significantly. So 6 million, 15 million, 30 million, which was insane for a D2C brand. Then, in fact, D2Cs did not exist as a category as well. And given that they had raised so much by 2016, they seemed to be in a good position. But they got stuck, and their investors wanted to exit for two reasons. India was facing a decline in 2016 due to e-commerce kind of slowing down. Even Flipkart went through a very difficult phase then. It luckily got saved and acquired later, but its major investors, which owned 65% of the company, decided to exit. And it was a kind of a distress sale because they raised 45 million and the investors sold for around 45 million. Titan bought the company for 45 million. It seemed like everything was done. The interesting thing that Titan did was it didn't give an exit to the founder. It kept the founder having skin in the game in the company. So the founders own 27, 28% of the company after the sale. So it was just an investor exit, not a founder exit. And the founders, despite this and being like a blue-eyed boy in the ecosystem, and then having this kind of fall from grace, they ended up continuing to execute. They grew rapidly. I think they were at 150, 160 crores of revenue, and they have grown by 60, 70% every year. I think by 2019, 2020, they had reached almost 550, 600 crores of revenue.
And how did they turn it around from there? I mean, it's quite the story. They learned from the Tata playbook and found some synergies. Uh, but yeah, what happened, and now, how did the pandemic play a role in that whole
Correct.
evolution?
So I think 2020 would have been really hard for most jewelry companies, especially because they have a big offline presence. CaratLane, because it was omni-channel, it was able to um, diversify its revenue streams, and because it was online, it in the beginning it obviously saw a decline because CaratLane had gone omni-channel with the help of the Tata playbook. um, I think the fact that they had figured out online so well, and they were able to scale this inventory light model, really allowed them to scale. And I think they had a crazy growth year in 2022. They were almost 200% of the last year. In fact, in June quarter of 2022, they did around 400 crores of revenue, which was as much as they had done just 2 3 years ago. So by the end of 2022, which is FY23, um, they are on track to hit almost 2,100 crores of revenue, which is an amazing story. From when they started, they were at 200 crores of revenue, and now 2,000 crores of revenue. It's a 10x growth in the last 6 7 years. um, and I think that that kind of turnaround is spectacular.
And where are they today? What is their current valuation, and what's next for
Yeah,
CaratLane?
so interestingly enough, um, Titan trades at 6 times revenue, and CaratLane is their fastest growing subsidiary. So if you attach a growth premium to it at its 2,100, 2,200 crore revenue, it probably is worth 17, 18,000 crores, even 20,000 crores. If the investors who had exited in 2016 had held on, their 45 million stake would be worth 1.5 billion today, in a 2.5 billion company. The founders still hold 27, 28%, so it's a huge deal. um, I think what's next for them is they will keep going deeper. They've obviously now started to add a lot of value to Titan. Initially it was Titan, giving them a lot of value because they were large and they had the brand, etc. But today they're able to tap a segment that Tanishq can't. They've also got into silver and are expanding into other categories. I think potentially for them to go deeper in India and expand globally would be the next steps. My understanding is that the founder has started to explore other opportunities because it's been a really long run for him. I think Titan could potentially be, um, or potentially would end up buying his stake. So that's probably what's next with the company.
It was quite an incredible turnaround, and really love learning about their story this week. Thank you, Aviral, for walking us through it, and thank you everyone for tuning in. We'll see you again next week.